Today we'll be reviewing ticker DOC, or known as Physicians Realty Trust, a healthcare real estate REIT that owns single units or multiple units across 32 states. Their approach is targeting quality investments, such as the medical office building sector, and partnering with physicians to increase quality and profitability of their care. In the future, we could see DOC providing healthcare real estate classes as well. As of right now, they own 290 assets, and 97% of net operating income comes from medical office buildings. However, healthcare REITs have declined the past year as the sector struggles with staffing challenges, higher labor costs, rising interest rates, and profitability issues. But we could see a rebound in 2023 if the reduction of labor cost and interest rates continue to lower. As healthcare system grows for the aging community, companies are seeing an increase in physicians and revenue year after year, expecting national health expenditures to hit $6 billion by 2030, and employment rates increasing 3% each year since 2019. During the COVID pandemic, healthcare facilities saw an increase in inpatient care, but it seems that facilities will be transitioning to outpatient care in the future years. With a well-managed and strong investment strategy, DOC is outperforming some of their competitors by generating higher revenues from medical buildings, lease rates, and operating margins. With rising construction costs, DOC has managed to achieve leasing spreads of a 2 to 3% increase without adding change to their leasing strategy. This allows them to provide shareholders with an appealing and stable high dividend yield of 6% since 2014. Now, after reviewing DOC's presentation, I wanted to take a deep dive into financials to see how the business strategy is holding up against competitors during the rough economy. I started off by viewing the weighted average lease term for the Realty Trust. This tells us the average time it would take for DOC's entire portfolio to be reduced or paid off. As of today, the Realty Trust has 7 years of income left before the principal is paid off. On the income statement, you can notice a decrease in 2019 from 422 to 415 million. This will have to be looked further into to understand what exactly caused the revenue to decrease. But let's look ahead. From 2019 to 2021, there was an increase in revenue each year. While the past 5 years, the U.S. inflation average is around 3.82%, DOC's revenue rate has increased around 4 to 5% each year. So this is a good thing. This tells us they are raising their interest rates as inflation keeps rising. Looking at consistent operating incomes, I wanted to see how DOC is performing against their competitors. On the chart, you can see from year 17 to 21, they have held very consistent operating margins, while their competitor, ticker HR, has been decreasing since 2017 and flattening out around 15%. This tells us that DOC is managing their cost and profits more efficiently. One of my favorites is the gearing ratios. This shows us the percentage of assets that are financed by debt, while the remaining assets are equity. You can see that DOC has an average gearing ratio of 39%, meaning that 39% of assets are financed by debt, while the remaining 61% is funded by equity. Comparing to their competitor, HR has a higher ratio, meaning they have financed more debt and less equity. Finally, after computing the NAV formula to determine if the stock price is trading at a discount, I found that the stock price is about 17% over its net assets per share. So at the time of this recording, it is not trading at a discount. I did run another model to double check its value. On the second formula, I found that the market value of DOC is $13 per share, while the stock price currently sets around $15. Now, this is my opinion, and it is not financial advice, so please do your own due diligence. As for me, I wouldn't invest into DOC until the share price drops below $13. And I don't like the fact there is zero growth within the dividends. This could mean that DOC isn't expanding or improving cash flows to provide a higher yield. Once the price drops below 13, I will reevaluate the company to see if for any improvement. Thanks for watching, and let me know what you think of DOC.